Welcome to this edition of the Martini Chats. Today we're going to be talking about when and when not to file a homeowner's claim. We want our clients to really understand that when you buy insurance, there's a lot that goes into that buying process, but we also want you to have the peace of mind when it comes to a claim, that as obviously why you're buying insurance, that you're educated on the process, what goes into that, and that you have that peace of mind knowing you're covered when a claim occurs.
So when we're talking about when to file an insurance claim on your homeowner's policy, it's easiest to talk first about when not to file a claim. If you suspect that the damage is caused by a maintenance issue, wear and tear, normal deterioration, it's not something that was covered by a specific peril, or it was something that was covered by, or that was caused by a peril that isn't covered by your policy, such as flood. Your normal homeowner's policy would exclude that. It's a separate deal. Another instance in which not to file a claim would be if the damage is less than your deductible. A lot of people will ask us, hey, my neighbor down the street is getting a new roof. Should I get one as well? And that is not necessarily a reason to file a homeowner's claim. You want to make sure that your damage is caused by sudden and accidental loss or sudden and accidental damage. That is what an insurance claim is covered, or when it's covered.
And we also get that question a lot about the deductible itself. Property deductibles are not medical deductibles. They don't accrue over the year. If you have multiple losses, you haven't met your deductible towards the calendar year. From a deductible, it is each occurrence. So keep that in mind. If you've got $1,000, a $5,000, a $10,000 deductible, each occurrence, meaning each claim, is a separate deductible. There are some caveats to that when it comes to hurricane deductibles in certain places that can accrue on a calendar year basis, but that is fewer and far between. It is more each occurrence. So if you do suspect that you have damage from a storm related or a claim that's covered on your insurance policy, it's important to know the steps to follow when you want to file a claim. So make sure it's a covered loss, document along the way, talk to us, and then analyze the damage versus the deductible to make sure it makes sense to file the claim.
When you file a claim, you may have a surcharge that occurs. Claims stay on your record for 5 years typically, and often they will carry a surcharge of somewhere between 15 and 30%. And that can actually be in conjunction with normal rate increases as well. So a lot of times we'll see, much higher than that, unfortunately. So you really want to make sure that it's going to be worth it to file the claim. You don't want to have multiple claims on your record at one time if you can avoid it. Obviously, sometimes it's unavoidable, but you just really want to avoid that when you can.
If you file a claim today, that is going to follow you for 5 years. If you go and reshop your insurance, or if you file another claim, your insurance company is really looking at that track record from a frequency standpoint.
The bottom line is claims are tricky. It's based on contracts. So it's really important that you have an expert in your corner who can help you figure out the ins and outs of when to file, when not to file, is it covered, is it not covered, what to consider. And the best person to do that, is your agent, or better yet, we have Ann Wooten or anyone on our claims team who can be your claims advocate. That's what they're there for. They work for Ross & Yerger. They work on your behalf, and they're the experts in this. So we recommend always please call us first if you have any questions. We don't recommend that you call the carrier directly because we like to be in your corner and help you figure it out.
That's what we're here for.
Yep, that's what we're here for.